Hi and welcome to the Market Alert for Friday the 28th of April 2023. So yesterday, as we marked up all of the upside, that came to fruition, and amazingly really, given that the GDP numbers were down, but that was ignored. They focused on earnings and sent the markets higher. So bonds and VIX dumped, Bitcoin and stocks pumped as stagflation signals soar, but over the counter VIX soared as yield curve flattened. US stocks rallied as participants reflected on strong earnings reports and data releases. And bonds down, stocks up after strong data and Meta earnings, formerly known as Facebook, I think. So, despite the fact that the Advance GDP came out at 1.1, forecast at 2.0, the market should have fallen out of bed, but this was just glossed over and the markets moved to the upside. So let's have a look and see what happened during yesterday. And we'll kick off with the Dow. So in the Dow, we marked up 89%. Well, we marked up all of the fibs yesterday, and the market just sailed through every single one of them, all the way up through 89, as you can be seen there, but below it overnight there. So the market did really well yesterday, up some 500 points in the cash market. The close of trade at 9 last night. So there you can see that move to the upside. However, the volume is low, so it just shows that prices were able to be marked up. It started off one way in the morning, as you can see here, from 8 a.m. on the electronic Dow, and then it just continued all the way through. In the futures, let's just have a look, see what the actual number was during yesterday for the whole of the move. So we came in at 534, so not too dissimilar from the cash. So yeah, there's a big move yesterday for the Dow, spark to the upside. I suspect we're going to see more as well. There seems to be talk between China and the Ukraine as well, instigating some sort of peace talks. So that will pump the market to the upside, even if the earnings don't. So the Dow yesterday moving higher, and continue to do so as well if it wishes that to be the case today. So you can see that we're already through this 38, this 50, we've got a 62 there where the market's tying in with that 89. But if we get through that, we've got the 78 on the upside, and then we go all the way back up to this high that we've got across here. And that wouldn't take a lot of doing at all, given that the market moved 500 points yesterday. So 34,133 would be the upside target there for the Dow. And in the German DAX, exactly the same. The market trading up through all of the fibs that we drew on the chart yesterday. We are back towards the highs and in that sideways move again for the German DAX. I'm just going to scrunch this up a bit so you can see the bigger picture of where we've come from up to this sideways move. So the market sitting at the 89 there at the moment, having taken out all of these other levels, and it only leaves the all-time high, I do believe, on this one. So let's just have a look at the monthly chart, see where we are. That's the way to see the bigger picture, and you can see we've just got through that 89 in the monthly chart, so we are set to move to the upside here towards that 16,298 as we head into May next week. You can see that it's quite a clean-cut job now to get to 16,298, make it 16,300. That gives you the all-time high in the German DAX there. In the 30 minutes for yesterday, you can see that we bottomed out at the previous day's low. We had a shakeout, and within minutes they brought the market up, and that's what they did throughout the rest of the day. The market continued to move to the upside. We were back to some reasonable numbers, as you can see here. So from there to there is 100, 200 points up, and at the moment we're sitting above the close and the DP, or just at the close, and also above the average as well. So free to move up to the high of yesterday, which it really is a foregone conclusion that the market will do this either in the futures or when the cash market opens, or just after, if they do the classic shakeout as they've done for the last 2 days and then bring the market back. Either way, it doesn't seem that much of a difficulty to actually do this. And going back to the US, the S&P 500 also trading up to the 78% retracement that we drew in yesterday. The market's below this at the moment in yesterday's high. Needs to stay above the 62% retracement and the 20-bar moving average there. In the 30-minute chart, it's one way again. Look at that, just one red bar yesterday as they pumped the markets to the upside, sideways overnight, sitting at the close above the DP and the 50 EMA and the 200 MA there. Bit of news today, which we'll look at before we conclude. And then, of course, we just got the high to take out above there where it is yesterday's, and it's at the BRN as well. In the FTSE 100, the market sideways to higher yesterday. Bit of weakness overnight though in the FTSE. Not a strong move to the upside like the US markets or the DAX. But in the 30-minute you can see what happened. We had again a double test of the lows, and then the market moving up with the Dow in the afternoon, a good 70 or 80 points. However, the 200 MA and the R1 got in the way, and now the market's sitting at the DP trying to hold this level to make an assault on the high of yesterday. In the currencies, overnight Japanese news from the Bank of Japan. I don't know what it is, it just I know it's going to be released. I've looked for it, can't find it. Maybe I'm just too early for what it is, but you can see the effect on the GBP JPY. This has moved up sharply, breaking out of that sideways move after weeks of being stuck in it through the 16796 there. 30-minute chart, there's the news from overnight, and the market continuing to move to the upside. Yesterday we were stuck in a bit of a sideways range, didn't do a lot, but we stuck at the DP, finding support before the market then made its way up on the overnight, as you can see there with the news. GBP is still stuck in a sideways range around that 124.50 level, and the 30-minute of that shows you exactly where we are at. So we sold off yesterday morning to the 200 MA. We did 100% retracement before we then moved up and created a new high overnight, and at the moment just sideways to higher but above the DP, so on the long side there at the moment for the GBP USD market there. And in the US dollar, still holding at that 101 level across here, so sideways to higher for the USD. Dollar index moving up on the overnight there, so we'll just again have to wait and see what impact it has. But let's move on, have a look at the metals, which it's inversely related to. And kicking off with silver, it did really well yesterday. Again, came under intense pressure. It was the last trading day of the futures contract. That's the May contract, which is always a month ahead, and of course now set for delivery. So that's out of the way. The market should be able to move back to the upside. But unlike silver, during the final day trading, or the last trading day, as it's known in the industry, the market usually gets monkey hammered. And it did. In fairness, it was pushed down 50 cents. You saw them buy back in though, and they brought the market back. And again, we're above the DP and above the close, despite the fact that the dollar index is moving to the upside. So is silver at the moment. So we're just going through, we need to get through yesterday's high and also back through that $25 level. Wouldn't be surprised if they didn't give that a bit of a hammering if it gets to 25 in the electronic market. Gold stuck in a sideways range. Also, though, hammered yesterday, as you can see there, down on the news at lunchtime with the GDP numbers when they were bad. But that didn't matter. It just was an excuse to get out of the futures contracts, those that were short, with a profit, and take delivery on the physical metal. So let's have a quick look at the gold-silver ratio and also the economic news items for today. So gold-silver ratio moving back to the downside because silver's holding better than gold. Simple as that. So you can see that by the red candles there. Quick look at today's news. Let's have a quick refresh, make sure we're getting the right times. So we've got French GDP today, German CPI month on month as well is also out, and Spanish CPI is also out as well, so that's going to affect the volatility of the markets, and then we go over to the US at 130 for core price, employment costs, Chicago PMI, and the revised UN consumer sentiment. And then once those are all out of the way at 3 p.m, the market will do whatever it wishes to do there. Okay, that's it for this one and for this week. So let's see what happens. Keep an eye on those China talks boosting the market, and also the DAX wanting to head up to that 16,300 level as well. Okay, as ever, thanks for watching. Really appreciate it. Have a great weekend, and as ever, see you in the next one.